Love it. Love being here. And I get asked, I'm sure you do as well. I think I get asked pretty much daily by neighbors, by friends, by city officials about the real estate market. What's going on? Got a call at 6:30 last night from the mayor. Peter, I need to get some info about the housing. What's going on with this? Investors buying. So very, very interesting stuff going on. And we've got some incredible speakers here today to give us some insight on what's going on. We're going to start off with Brad Bjelke. Brad is the CEO of UCAR.com, and he's been here, I think, yes, Brad, I think it's 7 years? Six years. Brad came to us from California, where he was general counsel for the largest MLS in California. Brad has been incredible. And the stuff he's doing, sadly, I think your average member, your average realtor doesn't realize all that's going on behind the scenes and all he's doing. And he's really positioned us to be an MLS going into the future as things will likely regionalize. We're in a position to take on those challenges. I don't know if you know this about our MLS, but it's a home-built platform. So Brad really manages a technology company. He didn't just buy the technology from someone else and throws our framework on it. They build the technology, which is really cool because we can give input. And it's a realtor owned. We're a part owner of that MLS. And so Brad and his team have been so awesome and be so responsive. And they little things. Cherie's not here. Cherie always gets some little search bar changed or something. Because she would speak up in a meeting and say, hey, why doesn't it do this when I scroll over this? And they can do it because we make them. It's homegrown, and Brad and his team do amazing work. And I don't know if Brad talks about this very, very often, but there's this entity that's been created called MLS Align that Brad's been a huge part of, a leader in that organization that's combined a few MLSs to do one of the things we hope are getting done in the MLS world anyway, but we're kind of slow at a national level. And they're able to be quick and nimble and get these things done. And now we're licensing our MLS products all over the country to other MLS. Pretty amazing stuff. So Brad's going to talk to us about some stats. I give Brad a big kudo. Do you make kudo singular? It's a kudo?
No.
It's always plural, Esther's telling me. I feel like Esther knows English really well. So I'm going to go with that. I'll give kudos to Brad. Because I asked him yesterday if he would come. So I thought, a little cross wires, I thought he wanted to talk to a sponsor for this event today. And sometimes, not very often, when Brad's like, yeah, I can say some words, I'm great. Somewhere through the grapevine, I heard that I thought he wanted to say a few words. So I called him and said, hey, as long as you're talking, give us some stats. I want to hear some stats. And Brad said, well, I'm not talking, but I'll do some stats if you want me to. So we do this together. I didn't even call you early yesterday. It was like 3 o'clock in the afternoon. So Brad's awesome like that. It's been really fun to have him here, and I will keep him forever. So Brad will be first. Jim Wood. So every year, I can say this because he's not here yet. He got his schedule a little mixed up, so he's on his way. He wants us to stall a little, so Brady, you jump in if he's not here, but he thinks he'll be here. So Jim, you guys have all probably heard Jim. He's an economist at the Gardner Institute. He works a lot with the state. Every year I ask, we bring him in every year. You want me to try to find someone different? And everybody says, no, please, bring Jim back again. He's awesome. His info is always really, really cool. And so, super excited to have him again. I'm not even going to guess his age. He's not going to be doing this forever, so let's enjoy him while he's still willing to come. He's not dying, he's not what I'm saying. I just mean people do retire. Even economists retire eventually. So, super excited to have him again, and hope you drive safely so he gets here. And then we've got a real treat. We've got Representative Brady Brammer, who is a local attorney with Spaulding Law, specializes in civil litigation, and he worked with cities a lot. Brady actually graduated from the same class as I did. So we were classmates back in the day. Clearly, he was higher ranked than I was. He's done really well. And he's this is your first term, right? Second, just didn't have an election last time. Nobody bothered you. Second term in the House. And he's doing great things. I'll tell you this, I think Brady is a rising star in the legislature. I think he'll go as high as he wants to go, as high as he's willing to tolerate the system and be a part of it. And so, and that's not just me, that's stuff I hear going on. Very, very positive feedback from our lobby group and from people around the hill that Brady's doing some awesome things. Brady's going to kind of get the local boots on the ground with the MLS, what's going on with the housing market. We're going to get the forecast with Jim Wood, what's going on in the state, what are they seeing? Is this a bubble? Do they see any indicators of lag, of recession? And then, what is the legislature talking? This is and we have some awesome city folks. Mayor to be, confident, I'm just calling it right. Mayor to be, Feldman all the Spanish word. Mayor Feldman's here. We've got a few candidates here. Is Mayor Westmoreland here? I didn't say, oh, he is here. Awesome. Eagle Mountain, those two, right? We've got, Spanish Fork's no slouch in growth. But we've got Vineyard and Eagle Mountain. Holy cow. Stuff is going on. Incredible. So, they're like getting mentioned nationally for growth. So, super excited to have the city folks. So we're going to see how everybody's talking about affordable housing, about housing stock, about supply, demand in Utah and where it's going and what's happening in Utah County specifically. So, I'm going to take the liberties because I got the money. So I'm going to give you a couple of things I'm seeing. So my perspective is legal perspective, and the questions I'm getting, and what we're seeing with the Forms Committee, with questions about how do we handle this in an offer? Can we do that with an offer? It's always about offers, right? How do we get that offer accepted? What I'm seeing, and the best piece of advice I feel like I can pass on to you right now, is mind the details. When there's a market that is in such a frenzied state as today, little mistakes compound. Right? Little mistakes go a long way. So, missing a date, missing a deadline, simple things, simple contract basics are what we're seeing blow up right now. Blow up transactions. And I've never seen, I was preaching, remember $500 earnest money, remember that? We don't like roll around, like, why is Utah put $500 earnest money? Well, I've seen $100,000 earnest money. I think I've heard of more. So that's definitely gone up. What that does is it raises the stakes, right? And you're walking away, and I hear more comments like, yeah, we lost our earnest money. Almost matter of factly. Like it's just part of the game right now. We lost our earnest money. It's not $500. And so it's really raising the stakes. And those little mistakes have the potential for bigger ramifications now. I had a call yesterday asking about an addendum and a deadline. So the addendum gives a date. This will be done by this date. And they asked, well, what's the deadline? What time is the deadline? Well, the default language in the REPSI is 5 o'clock. They say, okay, does that apply to an addendum? Some little stuff, I think, which just, we took the branches, so probably 5 o'clock doesn't really matter. Now, it really matters. And it was a matter of, it was an issue of whether or not they retained the earnest money. Whether they got it back was that 5 o'clock. The answer is yes. Unless you state otherwise, addendum is part of the contract. So that deadline, that 5 o'clock deadline, is assumed in the addendum as well. So little things like that. Big talk right now of the crazy offers. I think it's calmed down. It's calmed down a little. I heard someone say they bought a house the other day and they it was at list price. That's unusual. So sellers' eyes are getting bigger, right? They're adjusting, but that's nice to hear. But what we're hearing is with these, $50,000, $20,000 above list price, waiving all contingencies, which really are waiving rights to inspections, rights for financing, and then we're seeing maybe get the offer, and maybe a little bit of buyer's regret afterwards, right? What did I do to get this property? And I get caught up in that frenzy so much that now I'm regretting that decision. And the fear is that they're going to turn against their agent, right? They're going to say, why did you let me do this? And so here's my take on it. You don't make the decision for your client, right? But you're there to advise. And so helping them understand when they're waiving contingencies, when they're offering non-refundable earnest money, when they're accelerating maybe dates on when it will go hard, that they understand what they're doing, what they're giving up, so that you help them make the decision. You get to make it. Here is all the information. But please, you make this decision, and you've got to be responsible for it. Because I'm going to tell you everything it does, and I may tell you, hey, this is what we're seeing in the market. And maybe that's what it will take to get this property, but is it worth it to you to risk this much to get that property? You got to, at the end of the day, you got to live up to the responsibility of that contract. So there is a fear amongst the legal community that there could be a backlash against buyers agents for allowing buyers to put in ridiculous offers. Maybe they send you Christmas cards forever because you help them get the property. I don't know. Or maybe they say, boy, I gave up a lot. I lost a lot of earnest money. The same thing for sellers. Help them understand. I've heard almost a laissez-faire attitude towards breaching the contract. They say, hey, Peter, my seller wants to back out of the contract. I'll put all the brakes right there. What do you mean? Are they using a contingency? Do they have an out? Well, no. So you're asking me, Peter, my seller wants to breach the contract. Now, what does that mean? That's a different story than backing out of a contract, but they're doing the math. They're seeing $5,000. Remember when $5,000 of earnest money seemed like a lot? Yeah. Like, it's only $5,000 of earnest money. I have someone who's offering me $30,000 more on this property. I can do that math. I'm going to net $25,000 if I back out. Maybe. Talk to someone like Brady who says, well, let's throw this pendant on our property. We'll freeze that thing for that next buyer. Because they're breaching. The only option for the buyer is not take the earnest money or match the earnest money and walk away. They can sue. They can sue for specific performance. They can sue for other damages. They can freeze that property and do some nasty things. Now, I assume your buyer's walking away with the money, saying, okay, I'll go somewhere else. That's best case scenario for yourself. So once our clients understand, that's really our job, right? We're counseling them on this is what the contract means. This is what it means if you breach. There's a section that outlines it. Let's walk through it. If you still want to do this, seller, you can. But you're responsible, and here are some things they could do beyond the earnest money. I just want us to all be very careful, get things signed on time, understand our dates, and pay attention to the little things. We'll get this over. Brady Brammer's going to talk about record number of sales. I mean, this is a, you say there's nothing to sell. That's not true. It's nothing stays on the market for lots to sell. Sit back, enjoy, take good notes, and I'm going to bring Brad up and turn it over to him.
Such a boldness. Thanks for having me, Peter. It was short notice, but I'm always happy to speak and to offer hopefully some insight into the market. I'm going to give thanks to Dallin all the way over here who helped me put this presentation together. He sent me the slides at like 11 last night, and of course I responded back. Now it's not exactly what I wanted. Let's reconvene early in the morning, which we did, and we put this together for you today. So. It's nice. It's nice to be here in a hot market. I think I've been here 6 years, and we really have been in a frenzied market for 6 years. It just keeps getting a little bit crazier each year. So let's see if there we go. All right. So just this year alone, 2021, 3 of the first 5 closed months, we have had record-breaking sales in the MLS. This is all time, not over the last 2 years. This is the most sales we've ever had in those months in the history of the multiple listing service. So what you hear on TV and what you hear in the news is always, what about inventory? There's no inventory. There's nothing to sell. But that really isn't true. So this month may be the largest number. We're trending in June to have the most listings ever put into the MLS in 1 month in the history of the multiple listing service. So when people talk about lack of inventory, I say, do this. Put it in perspective just for a second. Active listings is a moment in time, right? Active listings are 8 o'clock a.m., 9 o'clock a.m., 10 o'clock a.m. They're going to vary throughout the day, and we're going to take an average of those. What you need to look at is how many listings are actually put into the multiple listings. That number indicates true inventory. And so we are on pace potentially for the largest that we've had in a long time this month. And that's a good sign. That's a sign that inventory is increasing. Off-market listings, right? Everybody talks about what is the home on the market? Can I show it? In our system, off-market listings are the lowest they've been as well. So people are not keeping things off-market, and the reason for that is pretty clear. They can almost sell anything right now. You're seeing little shacks in California selling for $1 million, barely have working plumbing. There's high demand everywhere. This is interesting. 11,877 homes were sold in Utah County last year. That's 22% of the state of Utah. So you guys are almost at a quarter of all the sales come from right down here. And an 11.8 increase over 2019. So sales are growing at incredible rates. And this one's a little tough to see, but I want to just talk about it. I've got it on my phone here so I can read it to you. But I want everybody to look at median sale price for the state of Utah. So when about a year after I started here, the price was about $250,000. And as of last month, it's $439,000. So it's almost a 76% increase in the median home price in our state. Price per square foot from 112 to 202. It's an 80% increase. And look at the CDOM, that's cumulative days on market. That is the MLS's number of how long something is truly on the market. 27 in 2016 down to 6 today. And when you think about the number 6, it means nothing really, other than the fact that that's every house on the MLS, right? You're talking homes that are $3, $4, $5 million that might sit for 300 days or 400 days. Park City homes that are in the 10 million range. All of it together still averages out to 6, which means that number keeps trending downward. We could be eventually at 4 or 5 next year. That means basically every home in Utah sells over the weekend. That's an incredible number to look at. Utah County. So when you're looking at your county here, from 2016, 255,000 to 450,000 today, it follows really closely the same trend as the state. But days on market were higher in Utah County at 20, and now also down to 6. So dramatic sales happening in a frenzied pace, which means active inventory has to be low, right? When you go on the MLS and you see 3,000 homes for sale in the state, that has to be low if sales are high and under contracts are high. Otherwise, our market would be so out of whack, right? We'd have so many homes for sale, so many under contract, that nothing would make sense. So the stats really do make sense. More things are selling, they're selling faster, active inventory is always going to look lower. Will we see a change in that? Possibly, but I don't foresee it. The nice thing I was saying at my table, the nice thing about being an economist and a weather person is no matter how much you talk, if you're wrong, everybody still listens to you and looks to you for an answer. So I have no prediction on where this is going other than the numbers are really good. Provo. So we just picked some cities here in Utah County. Provo also trends even a little higher. So back in 2016 at 204,000, almost an 84% jump to today in the median sales price. So exciting stuff for the city. Orem, again, follows very much the same trend. A little bit lower in appreciation, but the days on market also now down at 6. So the pandemic, the bottom graph shows what the pandemic did to the market, and it's really insignificant. We didn't see a crash. All we saw was continued frenzy. The growth is massive, right? 36% change from 2020 to 2021. You can't make that in a stock portfolio. You can't make that treat cryptocurrency, right? But you can make that in your home. And so it's pretty exciting, but it's also very scary. Someone at our table, I think Albert or this gentleman over here said, when is it going to top out? When are homes going to top out? When is affordability just hit a level where no one can afford the home anymore? And I don't really have an answer for that. I think it's demand. Last year, if someone said you needed toilet paper, would someone in here pay $20 for a pack of toilet paper? No one would have paid $20. I bet you I could find people that would pay $20 and possibly $100. And so it's the true nature of capitalism, right? What are people willing to pay and can they pay? And that price will continue to drive upwards until capitalism doesn't the needs aren't met. Days on market, again, I think this is the number one thing that we should look at. In 1 year, we dropped from 15 to 6. And so what does that tell your sellers? If their home is on the market for 9 days, what are they going to ask you? How come my house isn't selling? Right? That is not a normal question, but it is becoming the norm. So if this is the new norm, this is a whole different conversation than realtors are used to talking about, right? Like, we've got to sell your house in a week in order to ensure that you meet the average median days on market. So, do you have a question? I have a question back. Another question.
I'm just curious. If because of the demand, lots of people selling internally, putting it on as a mom. So does that affect this number?
It will affect this number, and I think there's a percentage that will. It's a small percentage, though. I can tell you, it does happen. We know it happens. Just like there's properties sold off market, we know that happens. It always happens. It's every market across the United States. It's with the number of sales and the number of listings. It's an insignificant influence for the most part. Maybe it adds a day or two. Maybe it drops a day. But if you added a day and said it was 7, still very, very, very quick. So that's where we're at. That's kind of the exciting thing right now. So $450,000 is our median home price in Utah County. I don't know where that fits on the Affordability Index, but that's a high number. When I moved here from California, that would have been sort of indicative of some of the Orange County areas in California in 2016. So we are on pace to grow and grow. Median price per square foot here in Utah County, $141 in last year and $187 today. You're approaching $200 a square foot. That is high, especially when you think of the size of the homes in Utah. A lot of the homes are huge, and that is going to drive prices up. Sold listings in Utah County accounted for $5 billion in sales volume last year. So that's a massive amount of money. That's a great number for commissions. $1 billion more than 2019. So $5 billion in sales volume in this county is pretty remarkable. And the state, I think we did close to 20 billion in the state. So we are growing in the state of Utah. Sales are growing. If we had a crash in the market, let's just say tomorrow job reports came out and there's massive unemployment and interest rates go up, we probably would have to go about 9 months before we would have inventory and prices really affected. So even if something crazy happens next month, we're probably well into 2022 before we see a massive impact. That's all the stats I have for you today. Other than I want you to all be careful with what you hear in the media about inventory. I said it at the beginning, I'm going to reiterate it again. Just be mindful of active inventory because it's thrown around a lot. There's nothing to sell, there's nothing out there. There's more to sell probably than ever before. There's more buyers than ever coming from all over the United States to be here. There's corporate money, massive corporate money coming in. There are new home projects being built in Nevada right now where they're building like 800 homes, brand new homes, and one investor is buying all 800. Okay. So they never go on the market, they never sell, they're sold to one real estate investment trust who's then renting out all of them. Okay? So you are in competition, your sellers are in competition with not only other people that want to live in places, but also with massive amounts of cash that are being infused in the market by corporate investors. And don't be surprised if you see a development in Daybreak or Springdale or Nephi pop up and all of a sudden it's owned by one company, one LLC. It would not be unheard of, and it is sort of a trend that we're seeing around. So we are not unique in Utah. There are places where things have calmed down, but a lot of growth is happening. Cleveland is not growing very much, so if you want to go to Cleveland, I talked to their CEO the other day, and their market has been pretty much stagnant for the past 4 years, so Cleveland has some good homes that are affordable. But if you're in most of the major metropolitan Silicon Valley places like we are here with great tech and great growth, the fact that people are being more mobile than they've ever been, working from home, moving around, we are not likely to see the stats fall. We're likely to come back next year and show you 30% more growth. That's more likely than not. With that,
tell us a little bit on the horizon with the MLS world.
yeah, for sure. So the MLS world is rapidly changing. There is more money, just like there's money invested in housing, there's massive money coming into organized real estate. So for instance, your big, what I would call your large companies, Realogy, Compass, Redfin, Zillow, Realtor.com, which is owned by the News Corp company. They're all having multi-billion-dollar valuations by Wall Street because they believe that the market is right for these companies. What that does for them is it allows them to buy other companies. So if you've been watching in the news or some of the things happening, companies are acquiring other companies. So Zillow has made a number of acquisitions. They acquired ShowingTime. They've acquired a whole host of technology partners. CoStar acquired Homes.com. Everybody is trying to acquire to gain market share. And that is a scary thing for us as an MLS, and that is, Peter mentioned our initiative with MLS Align. That puts 5 very large MLSs together to try to do similar things that other companies are doing to protect our assets, protect our industry, because those other people are trying to take all the consumer eyeballs onto their site and sell them services. And if we can create products that we own as an MLS and as an association, then we can offer things to our members that can help compete with those big players. But look for massive consolidation this year. It would shock me if Amazon bought Zillow. Right? That's not something that's out of the norm, right? We're talking hundreds of billions of dollars that are being spent, and there's cash out there, and that's partially because of the economy being so great. So, what we're likely to see here in Utah, Zillow hasn't started buying here yet, but iBuying is happening here. It's not impacting you greatly yet. There are about 20 to 30 homes being transacted by iBuying companies like Open Door every month here. that will grow to a number that's probably still insignificant to your business. But in the Phoenix market, which is the number one iBuying area, over the past 6 years with Zillow, Opendoor, OfferPad, Redfin, and KW, home buying, I think it makes up 15% of the market. So 15 out of every 100 homes sold are sold via iBuying. They're then turned around and resold back on MLS. Okay? So it makes for more sales, but it's not as impactful as maybe worried about or think about. It's just another way of home purchasing that will change us but not change us.
Brett,
Yep.
do you ever see a time when you will have one MLS?
I have seen that time for 6 years in my dreams, and at the board level, Dean Crandall's here from our board of directors, we talk about it all the time. It's politics. It is not rational. That's what I was saying. There's no logic in not having one MLS for the state. There's no logic. There's no money in it. There's nothing that you can convince me on a rational level that would prevent it, other than it's territorial and the old school thinking of, I don't want those people coming into my market to sell homes. I will say this: when you get a license to sell real estate, do you get it in Orem or do you get it from the state of Utah? You get your license to sell real estate in the state of Utah. There should be no impediments. I, as a consumer, can find houses anywhere I want. I can buy a house anywhere I want. The organized real estate world cannot create arbitrary boundaries around the ability to buy and sell real estate. And that is what has happened over the past 100 years, and it's breaking down. At MLS Aligned, we're breaking down around those entities. We have Arizona, we have Utah. We may bring in Las Vegas. We may bring in Colorado, and we may just surround those other associations eventually, so that if they don't want to participate, there's going to be nobody that's going to want to. And that's a horrible way to do it, but sometimes that's the only opportunity we have. We always say, if my neighbor doesn't think I'm good looking enough to date me, then I'm going to go around my neighbor and find someone else. And we're going to work together. MLSs are going to work together to make it better for brokers and agents. Because at the end of the day, the CMA, the statistics are better when all of our data is together. And when it's not together, you have fractionalization and you have poor reports for your clients, poor information that you can deliver, and that's being perpetuated for no reason other than worry. And it will break down. I think it's coming, but it's not going to happen tomorrow. It's going to take its natural course. But you should not be prohibited from going anywhere in the state.
Piggybacking on that question, give us update on Washington, how we marketing, that you guys doing out there.
So yes, have you seen it?
Yeah.
Right. So we have billboards running, we have postcards running. We're targeting the consumer heavily to try to let them know that their houses are best served if they're being listed on our public site and with members of our organization, because our members have the largest network in the state of Utah. We have seen increases every single week in membership. Small increases, 1, 2, 3, sometimes 10, and a lot more listings. And so it has worked. But it will never work fully for the realtors unless all the data is in our system. That's something we are working on.
The second question, can you give us an update on Feldman?
It's great. So we MLS Aligned purchased a full showing software solution to replace showing time. So it's super exciting. Our board of directors, I mean, it's a big deal. Associations and MLSs tend not to do things like this, right? So we said, let's step out of the box, because there's like 3 or 4 other showing solution providers out there. All of them can be bought tomorrow by Zillow, by CoStar, by any of the companies that have the big money, because they want to dominate the space. So we went out and we found a small company that was in business from 2014 to 18 that we looked at and we liked, but we didn't think they had a great financial sort of structure around them. They wanted to give everything away for free and sell these additional services, and it didn't work out well for them. So I was able to find their CEO. He's in Portugal now, and I was able to arrange a meeting, and we We would not have been able to do this alone. The 5 MLSs pooled our money together, and we were able to purchase all their intellectual property assets. We have a full functioning showing system already working. We're playing with it, and we're developing. We need about 9 or 10 features that we have to have in place in order for all of our members to feel like they have a competitive product. So it is really nice. It is really slick. It will roll out in November in Arizona first. And then it will roll out to probably us either in December or January this year. So, very excited. So you now, as members of UCAR, you now own a showing software and an MLS system. And that really is the key, is ownership of your technology right now without owning it. And we're in the best position of any MLS in the country because we own all of our stuff. If you don't, you're at risk. CoreLogic's at risk of being bought. Lone Wolf's at risk of being bought. Everybody has a price, but MLSs generally do not, because we service our members and brokers and we're owned by you, and you're not looking to make a quick buck. You're looking to have the best service possible. So that's what we're doing. So, thank you. Thanks for having me today.
Well, that's warming up. I'll give you a little bit of background. My mother was a realtor here in Florida. And so those that have been around for a while, Brady Brammer. So I grew up in a realtor family. I'm a big supporter of realtors. And I think I have, so Chris Kyler is one of my constituents. So I represent the area in Highland, Alpine, and Cedar Hills. This last year, it's been, for anyone that's serving in public service, and for a lot of people, there's an analogy that I have that is, there's a saying that describes what it feels like to be in public service during COVID. It is, there's no good place to stand in a massacre. So it doesn't really matter what your position is, what you believed or what you didn't believe, somebody was going to be hating on you for what you did or said. So let's talk a little bit about what happened in the last legislative session. So HB 82 was one of the big bills that came up. That was a bill dealing with accessory dwelling units. And one of the difficult dynamics for any of the local elected officials is the cities are dealing with the residents that are already there. So they're very responsive to the residents that are already before them, not so responsive to the residents coming in. And what that means is that there are a lot of pressures on cities to be a little bit more restrictive on things like accessory dwelling units and on density. And what HB 82 did was, by bringing it up to the legislature, what the legislators did for HB 82 was they said, we're going to allow accessory dwelling units as long as you live in the home. It's a single family home. The accessory dwelling unit is part of it. So, okay, so this is what we're going to deal with today. HB 182, SB 164, some ARPA money, some housing affordability issues, and any questions. So, in terms of the accessory dwelling units, most of the time people think of these as basement apartments. So HB 82 required cities and counties to allow ADUs, so long as their owner-occupied rental term is greater than 30 days, so you're not talking about VRBO type issues, and is within the footprint of the primary unit. Now, this is highly significant in terms of the affordability of a home. And overall, it may open up a lot of homes, the affordability of homes, because now that home is not only the primary dwelling unit, but it's much easier to have it as a rental on the side so that you can more easily afford that. Additionally, there was quite a bit of pushback from the cities on this point, but they were saying, well, we're going to be more dense than we can handle. What we as a legislature were saying was, look, in 1980, we had an average of about 4.3 people per household. It's dropped down to like 3.7 people per household, and this takes up to about 4.23. Is what our estimate was. And so, throughout we could kind of see this crunch coming because we knew that the supply of if there's nothing that you, within the legislature, they are very well represented by realtors and home builders and people who understand the construction market. Okay? So they could see the current supply shortage that we're going through right now. They could see that coming. They can see that we didn't have enough in the supply chain for housing to be able to handle what we were dealing with. And we were looking at all of the move-ins from out of state. I mean, I don't know if it's like this for anyone else, but there were several move-ins in my neighborhood. And several of them, 2 of the move-ins, were still currently employed by the state of California while they moved to Utah. And so, you know, and everybody kind of has that story where they're running into people who have moved here because they can relocate, and they appreciate being able to live with all that Utah has to offer. And so, in any event, we could see that housing crunch was going to be pretty significant, and this created a very quick and easy band-aid to help us deal with some of the housing shortages that we have, both in terms of affordability and in terms of availability of homes. So that was the main thing on HB 82. It was this came through my committees. I was involved in this quite a bit. And, you know, behind the scenes, there were quite a few cities that were contacting their individual representatives trying to get restrictions in on it and things like that. Some got in, some didn't. But ultimately, there were very few restrictions that the cities and the counties are committed to do because the politics are different in the legislature. What I mean by that is, when you're dealing with, when you come to the legislature and you say, hey, why can't I control what's going on in the home that I personally live in? That becomes a property rights issue. And so when you're dealing with a partisan legislature, as compared to what is typically a nonpartisan county or city council, they're going to be more sensitive to the idea of private property rights. And so that's why, in a lot of ways, this was an easier and more winnable issue at the state legislative level than it is oftentimes at the local level. So that's HB 82. Now, the rent is too damn high. Any chance I get to talk about that guy, I miss him. I wish he was still in politics. He formed the Rent is Too Damn High party. But SB 164 basically said, hey, city, if you've got some land that you want to do a high or a low-income housing, you can give that land to a developer for that, as long as you do the following. You have to 20% affordable housing. There's the deed restrictions. The affordable housing was defined. And then also, once the people move in, there's a mediation program that is provided to try to minimize the amount of conflict where they're just, you know, when you have affordable housing, you have a higher incidence of eviction. And so they're trying to address that at the outset through the legislative process, as opposed to waiting until you build this wonderful affordable housing program. They get in, they struggle with payments, and they get out within a few years. And now you don't have an affordable housing program anymore. And so the mediation program was put in there for that reason. Let's talk a little bit about the current market. You know, I'm not going to go too much into this because I think that James Wood will have more information on this while we're at it. But we've got a low inventory, we have high demand, we have rising prices, and we're still waiting for the wages to catch up. Now, wages were sticky for quite a while in Utah. We were doing great on our unemployment. Prior to the pandemic, we were about 2.3% unemployment. We're down to about 2.6, 2.7% a month. We've really recovered incredibly well as a state in terms of our unemployment. Now, wages were sticky from about, even though our unemployment was decreasing, wages they weren't increasing at the same rate as we would have liked up until about 2017. And then they started to spike. We started to see some real increases in wages and earning. And that pressure is still there, and we're starting to see that happen. But the housing affordability isn't keeping up with our wage increases. We are increasing on wages, but our home prices are increasing faster. So, as you can see here, here's the affordability index, and we've now taken a dip right at the end there, showing that the homes are less affordable than usual. And that's kind of your typical supply and demand issue in terms of housing. So that's one of the things that we're going to be looking at to address. Now, one of the things that oftentimes people say is, well, what's the legislature going to do? And as if we were moving as a unified body towards things. And eventually we kind of, as the session gets going, like maybe a few weeks before, and then as we move into the legislative session, we start to figure out where we're going. At this point, we have no idea where we're going because there's 105 people and they all have different, or 104 legislators. They all have different ideas and they're all basically throwing their ideas into the pot, and we're trying to figure out which ideas are really bad and throw those away, and which ideas might be good if we work really, really hard, because most of them are probably bad ideas. But that's kind of the process. It's a humble process in the sense of you have to put up an idea and let everyone tell you how stupid you are for that idea. And that's a good thing. They should tell you how stupid you are for your idea. But eventually you typically do get to some better ideas as it goes through the process. So there's not like a uniform way of going about the legislative stuff. There are priorities for leadership, and we have seen that they're working hard on housing affordability and housing supply, but what that solution will look like, it's still is what I would say. And then we did pass a grant. We allocated $35 million for the that we received from the ARPA funds. So it was a federal program that sent money to the state. We could use it on certain infrastructure projects, mostly related to broadband and water. But as far as housing, we did create a program that will assist municipalities with redevelopment for higher density. Then going to, what we're dealing with is, we're dealing with a huge amount of growth. Now these numbers are probably a little bit outdated, but not so much that it changes anything. As of about late 2019, early 2020, within the state, along the Wasatch Front, Davis County had about 45,000 developable acres. Salt Lake County had about 55,000 developable acres. And Utah County had about 255,000 developable acres, with most of that being the western and northwestern side of the county, as well as the southern portion of it. So if you're wondering where the growth is coming, it's coming here. And I can tell you, as a legislative caucus for Utah County, we're very concerned about that. We are doing everything we can to try to get, what we keep telling the state is, look, if you're going to dump all of the new growth into Utah County, you better fund the infrastructure. You better get the Mountain View corridor connected down into Utah County, all the way down through Saratoga Springs. Because if you don't, the people that are living out there, it will be so much more expensive to deal with. The congestion will be unbearable. Get that road built. So we got several portions of it funded. Now, that road is kind of different because it's segmented. The way that UDOT works is they identify various projects, and then they fund the projects based on the matrix that they have. And it's kind of they say it's a non-political process that's political, all kinds of fun. But the way that so that project is segmented into various projects within it, sub-projects. And because of the way that there were certain environmental considerations and environmental lawsuits related to what's called a record of decision. So it said you have to implement Mountain View corridor in a certain stage. You have to do it this way, and then it becomes this level of highway, and then this way, and then it becomes this level of highway, and it increases in its capacity and its speed as you cycle up. So we have to fund the Mountain View corridor in various stages to get it through that process. It was agreed to as part of the environmental review and various lawsuits. And so we're working through that. It's not an easy process, and it takes a lot of political lifting from your representatives, from your senators. So when you talk to them about getting that infrastructure in to support the new growth. So those are kind of the main things that I wanted to discuss with you, and then I wanted to open it up for any questions that you have. So if you have any questions, let's do it real quick. I see Mr. Wood over there, so I won't take too much time. Yeah.
Buddy, to you too. First part of March, I had a homeless in trouble with an accessory apartment, and having had properties before that had to be approved as an accessory apartment, it had the size of the windows for bedrooms. And I called the city first zoning department. They had no idea at all about the bill. They referred me to the city attorney, and when we called back, first tried to throw a bunch of legal issues, and then he said, well, maybe we read the bill, and then his bottom line was, it doesn't apply to us at all. And so I know it has a provision in there about cities with universities, but tell me about that.
So the funny thing is, when you were calling them in March, he may have been technically correct because the bill didn't go into effect until May 5th.
He pointed that out.
Yeah.
And there are some exceptions, but if it is owner occupied and they have the accessory dwelling unit, what I would recommend is that you work with the state ombudsman's office to have them kind of beat up the city zoning or a little bit, because the ombudsman office is there to provide a legal opinion, and they're going to know if you're part of one thing. There are a few exceptions that allow the cities to get in the middle of it, but the ombudsman's office will be your friend, and they will, if you're in the right, they're going to be a very effective group to let them know that you're probably right, and if this gets pushed, you're doing it. We're here.
Is that me?
Yep. I'll repeat your question.
One of the One of the most terrifying things I think we as realtors have seen in the last couple of months is the fact that builders, and we've known it for a long time, that builders have a different set of rules than, for example, an existing seller of the home. Utah has been very concerned and has done a fantastic job of protecting the consumer from the seller. For example, Utah versus Texas, the buyer has a lot less protections than what they have here. So I really love that the buyer is protected from any kind of scammy seller or whatever. When it comes to the builder, they've been allowed to run free and do whatever they want in their contracts, to the point that now they are really holding buyers up against the wall, asking for $20,000, and the buyer has to give it or not have a house, become homeless, all sorts of equity loss in the process. Is anyone doing anything to rein in the builder? And if not, why not?
You're going to have a hard time in the current legislature getting legislation against. A lot of that is because the makeup of those. They are homeowners. They're good guys. They are homeowners.
No, that's okay. I hear where you're coming from.
Yeah.
It's terrifying.
Regarding SB 82, one of the limitations was having the footprint of the house. How does that apply to tiny homes that people are trying to build on their lots? And then on the other one, with the deed restriction on the 164 on the deed restriction for 30 years, does that apply if they want to sell, and they can still sell that to somebody else and pass that deed restriction along? Is that correct?
So a couple of different concepts. The first one is the tiny home. It's not part of the footprint of the home. Now, if you were to connect it, then maybe you can consider that. But unless the homeowner is living in the tiny home and renting out a portion of the tiny home, I don't know that you could treat it the same way as your traditional ADU. Now, a separate issue was with the housing affordability. So that's separate from the ADU. The deed one is on the SB 164. And remind me again, what was the exact? And it would extend for the 30 years, kind of like a CC&R in a way. Yeah.
Clarification question. You had said something about
Just a clarification question. You had said something about affordable housing, and correct me if I'm not getting the verbiage right, but the state is giving cities funding to help to have builders or developers come in and create affordable housing. Is that right? Or
So
what did you say?
it's more they gave the cities permission to dispose of city land by working with developers to create affordable housing.
So who owns the affordable housing when it's created? And is that something that the people can purchase? Or is it eventually going to take up our owners' opportunity to own properties?
It would typically be the developer, but once the city creates the affordable housing and there's a deed restriction, it would pass through to private ownership, and then it would just follow the market. So it could impact it, but it depends on who buys it. Does that make sense?
My question was, did HB 82 come back during the interim session?
I don't think so.
Okay.
I don't recall seeing anything, but in a couple months.
Just in response to this woman's question, I think if it comes back during the legislative session, you could revisit HB 82 proximity to universities, and then it would probably address the concern that you have, which allows cities to restrict economic percentages for AU.
The university issue is a tough one because we, have cities with university populations, and the parents around those populations, the homeowners around those student populations feel like they're just getting squeezed out everywhere because all of our universities are fun. So it's a problem. Maybe wasn't as something that we wanted, but it was. I don't know exactly how they interact with Provo. As you're looking, because you're not going through, okay, how does this impact Provo? But it's, I don't know that implementing sense that entirely, but anything else? All right, thank you all so very much.
Well, thank you for inviting me, and just like compliment the representative Brammer along with the legislature. They have gotten involved in housing in a pretty big way in the last 3 or 4 years, which is great, particularly on the issue of affordability. It's been I've followed housing market for a while, and we've had, it's been mainly the nonprofits and housing advocates that really push the issue of affordability. But in the last 4 or 5 years, the legislature has gotten involved and really made some headway, I think, in terms of legislation and some funding. We hope in the future we can get some ongoing funding. And that's really what we need for some of the programs. But we right now we're really in my view, perilous territory in terms of prices, housing prices in Utah. We have had increases, really extraordinary increases the last few years. We've had that in the past. We're not, this is not unusual. Utah has a long history of housing price volatility. We'll talk a little bit about that. Yeah, let me just start with really the context of where we are and why we're having so much pressure on prices. And I hope most of you have a handout. These numbers in the first 2 slides are rather small, and you might not be able to read them, but they carry a very important point. And the first is on population. Between 2010 and 2020, the population in Utah growth rate exceeds every other state. We've increased the population by 18%, a little over that. And On the next slide, you've got the rate of employment growth, and there we're almost at 30% in the past 10 years, which is a remarkable growth rate. The only other state over 20% is Idaho. We are really an outlier. And of course, the employment growth is attracting population, net in migration, and this level of growth is exceptional, leads the country in both population and employment growth over that period. And when you lead the country in both demographic and employment growth, there's no way you're going to escape really putting pressure on housing prices, as well as infrastructure, transportation, education, air quality, all those things. Economic growth has lots of benefits, but it also has lots of challenges. And that's what we're seeing now in the housing market, where because of this economic growth, we really put a lot of upward pressure on prices. Factors driving housing prices. We've got some municipal factors. I'm on the board of the Home Builders Association of the Salt Lake area, and I hear every month about regulatory delays at the city level. Development costs have gone way up in the last few years, and zoning ordinances, and that comes down to, in many cases, density and what's allowed, and then a negotiation goes back and forth between the city and the developers on how many units they can develop. And generally, developers are going to want more than they're going to be allowed. They often get cut back, so we get less production. Market factors, economic and demographic growth leads. Then you've got land costs, material costs, labor costs, and labor shortage. COVID-19 had a perverse impact on the housing market, and we have a housing shortage. That perverse impact really was the Fed stepping in May a year ago and forcing down short-term interest rates down to almost zero, and consequently interest rates overall begin to drop, and we have a rush into the housing market. A year ago in April, I thought for sure with COVID-19 as it was unfolding, that what we see in both buyers, sellers, home builders is a reluctance. They would move back a bit and wait to see if the dust settles, and before they would move. But in fact, I was very wrong. It went exactly the other way. After we had a couple of months there where things were kind of sorted out, and then it really took off, and in the last 7 or 8 months, it's been really extraordinary. And one of the causes is our housing shortage. And the housing shortage is the way it's generally referred to and documented is looking at households on an annual basis and number of housing units. Did we get enough housing units for the new households? Coming out of the recession, we were short for several years in terms of housing units. And you can see the red bar is the households, and the blue bar is dwelling units. It wasn't until 2018 that we began to get some sort of equilibrium between those two. So we built up a housing shortage over several years. Now, I got to comment on this because it gets misinterpreted, I think. A housing shortage, when you look at these numbers, you come up with, well, there's a shortage of 50,000 units, 45,000 units. Well, what happens? That doesn't mean 45,000 people are out looking for a home and they're homeless. What it means is you drive down the vacancy rate and you increase the doubling up. And we've seen that in both cases. We have more doubling up and we have very low vacancy rates, have had for several years. Of the 9 years, vacancy rates in the Salt Lake market below 4% for apartments. Never had anything like that. It's the most prolonged period of very low vacancy rates. And that's because of this housing shortage. Now, again, this is a traditional way to look at it, but I think it's a more powerful case if you look at points of entry into the market. These are other market indicators. That slide, that previous slide, we do, the Gardner Policy Institute produces the demographic data for the state as well as the construction data. And I have a pretty good feel for how those numbers, we rely on cities and counties to provide us the building numbers, and the household numbers require a lot of assumptions. And it's an estimate and then a projection, and very sensitive to how many people are in a household. Is it 3.15? Is it 3.10? And it makes a big difference. So those assumptions always make me a little, do we really have a shortage? Because I get pushback sometimes from groups that say, no, we don't have a shortage. Well, if you look at the market conditions, the only way you can get into the housing market, unless you double up with your parents, is through you rent, you buy an existing home, or you buy a new home. Those are the 3 points of entry. So what does it look like at each one of those points of entry? The rental market, as I said, has been very low. Utah County, it's been, I did a survey a year ago, an annual survey, which I've done for many years, down here for Cushman Wakefield, and it was below 4%. We'll do another one in a couple of months. And I think it's going to be about that again, probably around 4%. Very tight market, the same in Salt Lake County. You look at the new home market, builders are going flat out. And we have a lot of production. Last year was the biggest year we've ever had for a new dwelling unit production, almost 33,000 units, which is terrific, more than the households. So we're catching up, we're closing that gap. But builders, and I talked to a lot of builders, and they call it a frenzy. They can't even quote prices, and part of that has to do with materials, but the demand is so high, selling everything they can build. And the existing home market, price increases, we're going to talk a little bit more about that, days on market and shortage, which all point to stress in the market, that demand exceeds supply. And at this point, I want to thank Brad and his group for UtahRealEstate.com. They provide this information on the existing home market, and without it, we would be flying blind. And as I've said in the past, some people won a Nobel Prize using MLS data. I haven't been nominated, but anyway, thanks, Brad. I really appreciate it, because those data are, and it's a gold mine what they have. So we're going to be referring to some of that here in a minute. But again, if you look at the market, not estimates or projections or assumptions, look at what's going on in the market. In all 3 points of entry, there is stress. You can see that. And so that makes, I think, a very powerful case that we still have a housing shortage despite how much building we've had in the last 3 or 4 years. As I said, Utah has a history of price volatility. There are points in time where we have led the country in housing price increase. Now, this is a little bit different source than Brad's. And it goes back to 1975. This is a federal source, Federal Housing Finance Agency, and it's an index, but it shows long-term how housing prices in Utah have performed. And you can see there have been periods, the late 70s, and I did live through that, when we had 18.2% in 1 year and 16.6% in the 90s. We had another year in the mid-1990s where we led the country on this index. And then just before the Great Recession, we had another bump. So we've had periods of really rapid housing price increases. Now, what it shows over there on the right is quite different than you'll get from our MLS numbers, which are going to be much higher. We'll see that for Utah County. But the point of this chart is we've had periods of really rapid increase in housing prices in the past. Now, the legislature did get involved in the the late 90s when we had that 16.6% and passed the first legislation on housing affordability, HB 295, and then there were many years before they got involved again. But this usually provokes the legislature to get involved when you see, when they hear about the distress and they see in their own family and friends the difficulty of getting into the housing market. Annual percent change in the median sales price of a single-family home in Utah County, and you look over there on the extreme right-hand side, this is the first four. I'm sorry, I didn't put that in the heading. This is the first 5 months of the year, January through May, and for each one of these years. And 2021 is, well, if you go to the next chart, you can see how weak it was there during the Great Recession. But then what we've had is this prolonged period with price increases. And if you look at this chart, you see that 2021 is really, that's the old hockey stick. You can see how it just explodes up. 25%, what it was, 25, almost 26%. In the first 5 months of this year compared to the first 5 months of last year. That is not sustainable. It really can't go on. I don't know how it's going to play out, but those sorts of price increases just aren't sustainable. There are constraints on the market. Very low interest rates have really juiced things up and our economic growth, but this it can't persist for very long. And this is why I say we are really in perilous price territory. If you look at the metro area in Utah, Salt Lake County, and the Utah County metro area, which includes several counties, but we are in the top 15% of all metro areas in housing prices. Not increase, but the housing price. So if you look at 85% of all metro areas have housing prices lower than we do along the Wasatch Front. And our incomes, particularly if you adjust for family size, aren't in the top 15%. So as the representative said, housing prices are increasing faster than incomes. And I've got a chart on that in a minute. But anyway, that hockey stick there has got to moderate at some point. And again, these numbers come from Brad, UtahRealEstate.com. Median days on market for single-family homes. And you look at this, and again, this is January through May, each one of the years, and it's just plummeted. Even during, before the Great Recession in 06 and 07, it was still in the high 30s. Now, between listing and under contract, it's less than a week. And that is unhealthy. That's a really unhealthy market. And everybody in Utah has an anecdote on the housing market and what's going on in their neighborhood or their family. And it's crazy. And it's confirmed how crazy it is by that number 6. And then the previous chart where you get price increase in a single year of 25%. Average annual rate of growth, median sales price in selected areas, Utah County, over the last, this is just to 2020, so this is 5 years, almost 9%, 8.6%, a little bit below Salt Lake County or the state. But what that means is, at that rate of growth, the price of your house is going to double in 8 to 9 years. Now, I was involved in, it was actually down here a few months ago, and we were showing a slide on other cities and how our rate of increase, at this rate of increase in another 20 years, we will be like we're saying Seattle is now. And it was I think it was a city or county official said, well, what's wrong with being like Seattle? And my reply was, well, you have housing prices that high, you exclude many people from the housing market. Then I didn't go on to say, well, maybe, I don't know, I didn't go on to say that, okay, let's take one of your kids at, say, 25 years of age, and they buy a house for, in the current market today, $400,000. They keep that house for a period of a generation, 25, 26 years, and they pay that mortgage down. Hopefully they haven't refinanced, but they pay the mortgage down, and at this rate of growth, even if you adjust for inflation. So what's the real rate of increase? The real rate of increase is a little over about 3%, which in 24 years will double. So that equity, that price in real terms would be $400,000 today, $800,000 in a generation, and probably pay down most of that $400,000 in length. Might still, after 24 years, might still own $100,000. So they got $700,000 in equity. If they rent, they got nothing after generation. So it's the pathway to wealth creation that is so important with the housing market. And without that opportunity, we're going to see greater levels of inequality. And we have more renters now than we've had for a while. Utah really favors home ownership. We're the only state in the country where the home ownership rate has never fallen below 60% since 1900. 60% or more. Right now, we're at about 70% of households are homeowners. Housing affordability, this is a quick measure, often used, dividing the median sales price of a home by the median income, household income. And back to 2000, then I go from 2000 to 2010. But in 2000, it was 3.2, that ratio. The housing price divided by the household income. So 300,000 divided by 100,000 in income would have been around 3. But you can see how that has increased. It's now at 5.6 ratio. And anything over 5 is considered severely unaffordable. And so we're in that territory down here as well as Salt Lake County. Now, there are several different groups that do this. The one that I refer to here is, this is an international study. They do 92 different metro areas. And in the U.S., I just selected some. And Utah County, of course, is one that they do. But the metro areas of both Salt Lake and Utah County are too small to be included in this. But I can come close to the numbers because we got the data. But I selected a couple of areas. You look at Pittsburgh, it's 2.6. St. Louis, 3. Very affordable. Then you go to who's comparable to Utah County, Sacramento, Denver a little bit higher, Portland a little bit higher, then Boston, Seattle, Los Angeles, San Francisco at 9.6, and Hong Kong is the highest in the world and has been now for about 4 years at 20.7. They just have very high housing costs and relatively low incomes. So difficult, but you can see that where we are, and I think it's just so important that we understand where we are on this trajectory and what it means for Well, you're the real estate community and most of your owners, and you benefited from this growth. I have, and I know the university has. Our office, the Gardner Policy Institute, has benefited from the growth that we're having. But there are people who, it's the next generation. It's the children, really, and the grandchildren that I think we have to worry about, and we're going to see more people leave the state because the price home in Utah County in 2015 versus 2021. And in the interest and maybe assumptions about 3% down and what the PMO was and homeowners insurance and the property taxes. Okay, so the mortgage payment for that home, and the home was, of course, much lower price than it is now. It's in the high twos. The mortgage payment after 3% down was $1,187. Today, it would be almost $2,000, $1,958. Okay. Then on top of that, you have property taxes. Property taxes are of course determined on the price of the property. So those moved up for the buyer in today's market. Then the same with PMI. It's based on the value of the loan. And then you have homeowners insurance, which doesn't change much. The total mortgage payment has gone from $1,863 to $2,745 for a homeowner trying to buy the median price home in 2021 versus 2015. That's a 65% increase in your mortgage payment. Now there's some offsetting factors, and I have those over here on the side. In the meantime, median household income has increased by 32%, so got a little bit more income that offsets some of this. And adjusted inflation, the increase drops to 47%, but it's still a very big increase in your housing payment. And that's, I think this chart details an important story, how incomes aren't keeping up with housing prices despite drops in interest rates. Interest rate has gone from 3.7 down to just under 3. And that's a pretty big drop. That's a 25% drop in the interest rate. That has been offset by a rapid increase in price and mortgage payment based on that price, along with the PMI and the property taxes. PMI increase in property taxes offset some of that benefit from lower interest rates. And I followed this market for 45 years. We have had crazy times before, as I showed, the late 70s, mid 1990s. But the last 7 or 8 months have been unlike anything I have seen in terms of days on market, the number of auctions, the excess demand over supply, people paying 10, 20% over list for a home. We have never seen that sort of activity and characteristics in other housing cycles in the late 70s and the mid 90s. So it is really worrisome, and my view is for those trying to get in, it is not a healthy market. And I don't know, I have on the handout, you can see this, but this is an important chart, and then I'll sign off. But the green shows where we had periods of price increase. The red, where we've had periods of price moderation. And you're going to have to refer, I'm going to have to get close so you can see this on the red. But we had in 1975 and 1979, 4 years where that period, housing prices went up over 70%. And the annual rate was 14.4%, but it was only 4 years. Then we had a period of moderation, the 1980s. During that decade, following that run up in prices. And this might give us a hint of where we're going to head in the future, seeing what's happened in the past after we've had rapid increases in housing prices. The 1980s were very sluggish years for the Utah economy, and housing prices over the decade increased about 20%. You know, it was a period where we just had no, and we suffered a lot of economic problems, which I don't think we're going to have in the future, following this one up. Then we had a run up in the 1990s, and the 1990s is the only decade in the last 75 years that is comparable to where we are now. And it was a golden period. We had 7 years. You can see prices went up 88% during that 7-year period, and the average increase was almost 10%. Then we had the price moderation. We had a little bit of a recession in the beginning of the new century. We had 7 years of moderation, and the average growth rate was only 2.5%. Then the lead up to the Great Recession. And it exploded again, 42% in 3 years, 12.5% average growth rate, and then that's followed by the Great Recession, where we have 5 years, we actually had 16 quarters consecutively where prices went down. We've never had that before. We've had some years where prices went down, but 16 consecutive quarters. So now we follow with, and making up for part of what went on in the Great Recession, we now have this price increase 8 years, and we're into the 9th, and you can see it's 75%, 7.3. But if you take, say, the last 5 years, because part of that 8 years, maybe 3, was makeup for what happened in the recession. But if you take the last 5 years, you're still really strong growth, 50% almost increase in price. And, but we've been here before, but there are some characteristics that are really different, days on market and these auctions. So, but we've had periods of rapid growth followed by periods of price moderation. And the forecast for 2021, ending on this note, last year it was about 11,800 total sales. That includes townhomes, twin homes, single family condos, about 11,800. It looks like it's going to be over 12 this year, probably 12.5, 12.4, somewhere around there. And then next year, I think it's even going to be bumped up a little bit. I don't know, some of the things I read on national, because prices have gone so much more bought, more sellers are entering the market. I haven't looked at those listing data, but I hope that's true. And single family prices, now 20% this year, and in 2021, I'm gonna, excuse me, it makes me cough. The prices. In 2022, I think, bold prediction, less than double digit height. Anyway, it's great to talk to you. You guys have a prosperous year. This year is going to run so hot, and all the numbers we look at, it's just not only real estate, but other measures. It's really a strong market. So, thank you.
Well, thank you all for coming today. Hopefully you got some good info. I want to thank again Brad Bjelke, Brady had to take off, Brammer, and Jim Wood for speaking to us today. Thank you. Drive safe. Be grateful for the rain. Let's have some more.